What's going on YouTube? Chris here. Want to bring you all an update today. Bitcoin, we're going to be looking at Bitcoin on the 1 week time frame. And I wanted to basically make this video to prepare you and show you what to look for, because many people here, they've only been in cryptocurrency on this backside during this brutal bear market that we've been enduring, since the top started in 2018 there. And this is going to be new to people, how this market works. And what I want to do is actually backtrack here, and we're going to be looking at the percentage gains of the pumps to the upside and then the retracements to the downside here on the weekly time frame. I think this is very important so you know what to look for, because if you're a long-term investor, you're going to have to be able to deal with those drawbacks to where, Bitcoin may have just pumped 200% and now it's going to pull back 50%, and you have to deal with that, and you have to realize that these things happen if that's the way that you're going to play this. To my swing traders, that's typically what I prefer, trying to get those impulse waves, those swings. That's what I think works best in the cryptocurrency space. But, it's important to look back at the history of Bitcoin and see what happened the last time we had these parabolic moves. And that's what I want to get into today with you guys. So I want to get into this, show this to you. If you like this, like, subscribe, hit that notification bell. We're trying for 300 likes on this video. You guys rocked it out for me on the last one. I'm very appreciative of that, and I mean it. So we're going to get into this. Typically what we're looking at here, and I just want to start back, we started April 18th, 2016. And typically when we have these pumps to the upside, this one was 80%. The retracement that we ended up having, I had to scoot it over into here, but basically the retracement we had was 39%. The next pump that we ended up having was around 242%. And then the retracement that we ended up having was 43%. And then we did another pump, and it was up 149%. And then we took the retracement, we moved it out here, it was 41% retracement. And then we pumped again, and this was 268%. And then we didn't get into the backside because I was entering the bear market there. But typically the retracements that we've had after these massive pumps are around 40 to 50% retracements. And we have to be aware of that, because as we are entering the macro bull market here, and which I do believe we are, because we broke out of this macro downtrend that's very significant, and it came on above average volume. So what we need to do now is continue that volume to get up over top of 12,387. That's going to be the very, very important overhead resistance area that we need to get out of, because we're getting wedged right here between this downtrend. We don't really want to come back, drop through this trend line again. Then that would show that this was just a false breakout here, and that's the last thing we need. We want this to continue up through that 12,387, because if we get through that on the weekly time frame here, yeah, there may be another stop up at around 16,000, but for the most part there's a pretty open gap here, and things could get very enthusiastic, to put it lightly, and we really could hit those all-time highs very fast. But it's going to take getting out of this. But I like that the moving average we're looking at on the weekly time frame here, we're up above the 30, the 60, the 100, the 200. The trend is to the upside here. We need to continue that. I still have my alarm in at $9,000, because that would show that we broke down through here, and that would be trouble. We can still back test this trend line that happens and then make the move through 12,387, but that hurts performance if you do back test that area. You typically, in something like this, we want to break through that with conviction, get up through that 12,387 and turn it into support, and then go up and hit the next area. But it's so important that, in my opinion, we hold 10,500, number one, and number two, that $10,000. I never want Bitcoin to be trapped underneath that again. We always need to hold that as support. That's going to be the key. But as we're making these rips, if we can continue this to the upside, just be aware that there's going to be these 40, 50% retracements. And a lot of the times this happens in about 3 weeks. They're very fast, sometimes only 1 week. And you'll have those massive sell-offs like we just saw, the flash crashes basically. Over here we had about 6 weeks to the downside for 43%. And this is the stuff that I like to go back through and say, okay, this is potentially what I can use for this next time, and also look at Fibonacci levels and all different types of things. If we get into some indicators here, we take a look at our relative strength index first. This is going to be important on the 1 week time frame. The last time we were in these bull markets, our RSI on the weekly was getting up into the 90s. So we need to chart that down and know that a lot of times over 70, it's going to continue to run another 20 on the RSI. So you don't want to be selling out at 70 a lot of times in the crypto space when you're going straight up. right? So these are things that we can learn and we can use for this time around. This last time when we even had this move here, we ended up getting to around 82, 81 on the 1 week. And right now we're at 67. So we could still have plenty of room, even up to that 90 area, to make another shot to try to get over top of all-time highs for Bitcoin if we can keep this trend moving here. And what we almost see here is that big post up on volume, and then the volume dwindled down here. And then if we could get a huge another swell of volume, that'd be like a massive like flag pattern type deal, or symmetrical triangle, obviously on the 1 day time frame. I guess we could say that. But if we can get that, sometimes you can go up over 50% out of that. Just reading about it last night. And symmetrical triangles really aren't one of the best performing chart patterns. There's many that are even better than that, like the high and tight flag. That's one that you can go up almost 100% sometimes and really get big rips. But you know, guys, I just want to put this on your radar here. Be ready for these things. And if you get some from this, like, subscribe, hit that notification bell. Really look for those retracements and be able to sit through them if your plan is to long-term hold. God bless each and every one of you.